Hello, everybody. Welcome back to the Prospero.ai stock market live streams. Great to see everybody today. I saw a few familiar names in the chat already. We see JC is here. What's up, JC? Good to see you. We have Kevin Hawthorne in the building. What's up, Kevin? Oh, it was your birthday. Happy belated birthday, Kevin. I hope the market has been treating you well as a birthday gift. Today, people should be happy to see that the markets are in the green. The whipsaw market continues. It seems like day by day, just the gains are faded, the losses are faded. We can't pick a direction in the market. We've been trending choppily sideways for a while. The volatility is high, but we're going nowhere, it seems like. But today we are up. The QQQ is up about 1.75% now on the day. SPY up 1%. Dow Jones up 2/3%, and Russell up 1.25 here. The VIX is down 12% on the day, but still over the 20 mark. So a lot of stocks are moving bigly here, and we got some great stories to jump on into. As you guys are rolling in, be sure to hit that like button, whether you're watching on YouTube or Twitter. We love the likes. Good to see them piling up, and we've been getting a lot recently, so thank you guys for the support. Let's take an early look at the QQQ, SPY, XLI, and XLK, all net option sentiments. Wow, and still no change here for the QQQ and SPY. We're seeing QQQ net option sentiment of 4 and SPY of 0. So no switch there just yet in terms of net option sentiment levels. XLK is at 14 and XLI is at 26. So a little bit of pullback in those actually since we checked in and we were streaming on Monday. Some of the topics we're going to get into today are updates on the Iran conflict. We are seeing some headlines that are probably driving some of the bullishness in the markets today. Iran possibly secretly reaching out to the USA to put a halt to the war or try to de-escalate things. We are getting some data about the Strait of Hormuz and a Goldman Sachs prediction about oil prices. No surprise that they expect they could rise quite a bit if this conflict continues. One of the largest sectors or areas of the market we are seeing making the biggest move here today is anything related to crypto. So Coinbase is up over 15% right now. Bitcoin is up over 8% and now up to 73,000 per Bitcoin. One reason this could possibly be going on today is Donald Trump may be siding with the crypto industry over the banking industry. So there's an ongoing dispute in this Genius Act that is for the crypto industry over whether stablecoins can pay, from the coin themselves, and this would be a dangerous thing for banks that give interest to members of their banks. So the banks hate it. Crypto wants it. There's been an ongoing disagreement, but Trump sided with the crypto industry. So, Trump support and administrational support pretty good these days for stocks and sectors. So that could be a reason why crypto is up. We're also going to highlight the South Korea stock market today because it has been plummeting the past couple of days now. It is still up year to date, but let me get the exact statistic for you. It is now down about 12.2% in just today's moves for South Korea. So will this have any effect on the USA? Why are they moving so much? And it's pretty crazy to see a full index for a country moving to that degree. Pretty big crash. Hopefully it doesn't mean a sign of things to come for the USA market because that would be a lot to handle, but we shall see. Another update from Michael Burry, who since last year when he officially declared he was against everything to do with AI, the valuations, Palantir, NVIDIA, the depreciation of assets, all of it, which we've been covering on these streams. It now has come out today that he has taken a position in Adobe, which is maybe the most hated name, it seems like, affected by AI, and they have been plummeting. Let's look at Adobe here. So year to date, Adobe's down 21% now, and from all-time highs, they are down probably like 60 or 70% or so. But now with Michael Burry taking a position, a lot of people had been mentioning Adobe as a value player. We'll ask George and we'll look at the Prospero signals. Is it interesting now that they have Burry support? And I guess it does go into his whole thesis of being against the whole AI narrative. He seems to be counter everything AI right now. So it's actually fascinating to see the moves he's making. Speaking of AI, we have one of the biggest winners of it, uh, Broadcom, reporting after the bell today. So we will take a look at them in the Prospero signals. They have pulled back a bit more than NVIDIA. I believe they're down about 20% from their all-time high at the moment. But still a massive company, about 1.5 trillion in market cap. So what can we expect from Broadcom? And if they move up or down, how will that affect the overall markets here? Especially such a large company, you'd think if they make an outsized move, it will be felt one way or the other. Then last but not least today, we have Apple releasing a new MacBook Neo, which is starting at $599. Their cheapest MacBook of all time. Hello, George. Welcome to the stream today. Uh, why the heck is my virtual background the background of our whole thing? Wait, let me see if I can make
Yeah, that's weird.
There we go. It's back to being regular. All right, back to our normally scheduled programming. Welcome to the stream today. Got a great list of topics here, and good to see the markets in the green overall as we are beginning the stream. Actually, probably the biggest green day in a while, but it just continues the trend. I feel like we have crazy volatility, but it's weird to say we have crazy volatility because the market's gone nowhere in 3 months, but it just is in this range, like up and down, day by day. The whipsaw continues. We got some good headlines about possibly de-escalation with the war of Iran that could be making the markets make that bullish move today, where it was said that Iran may have secretly reached out to the USA to try and end the war, end the conflict, de-escalate. It was rejected by Iran publicly, so I don't know if it's true or not, how much you believe it, but it seems like the market is liking what it's hearing. I don't know if you can point to anything else that would make the market rally so much today, but how are you feeling seeing the market rally? And has it changed any of your bullish bearishness overall?
I mean, these are some of the harder things to play, right? Because the first thing is, yes, that's the reason it's rallying, obviously. But the other thing that you have to look at is just the idea that it's not settled yet, right? And we're moments away from an escalation. I saw a very troubling poly market bet today getting a lot of volume, which was like there will be a nuclear launch prior to like March 30th. And I think that had like 500K on it, or March 31st, which is very troubling. And it had that has like 5% odds. Like, who's betting that? What do they know? So it's hard, right? I think that's why, that's why I think we have 3 energy names in our long portfolio right now. And if there's one thing I'm observing today, that seems like a good place to keep it, right? Because names like LNG and TPL are not doing so bad. Like, it's not like they're hemorrhaging money. And we do know if they escalate, it's going to go up big. So I do I we are comfortable with energy in our portfolio. I think that's a good place to that's a good way to hedge your downside, especially if you have a lot of tech. You can, especially if you're long only, I think that's like a really good portfolio to keep now, because it can escalate. And the other thing that we're hearing is that even if things do settle, that maybe we're looking at 30% higher oil prices. So I'm feeling good. I'm feeling good about energy right now, above all, but be careful. Like, it's very easy to look at today and say we're going to get a bigger green day tomorrow, and you might not be wrong about that. The way that the market is accelerating today. Things could be settled tomorrow and it just goes like way up, which is probably why we will end today pretty even long short, because you really don't know which way it's going to go. And I think that's what's really hard about the market right now.
That's a question I have. So, like, even if this war were to end relatively quickly and get kind of resolved, would there be ongoing impacts from it, like you were talking about with the oil? Goldman Sachs put out a case where they, like you gave the number 30%, they expected oil to rise to about 100 per barrel. There's some data out of the Strait of Hormuz where the activity within it is about 90% lower than before the war. So even if a bullish scenario were to happen in terms of like the war or the fighting ending, would there be ongoing impacts to the economy and markets that kind of we'd have to work through still?
First of all, I just saw this. Happy birthday, Kevin. Always our best sharer here. Yes, there could be oil, like there could be continued oil prices, but I think a lot of that might be priced in already. You might have just those prices priced in here already. I think what's the other part of that question is, like, I think if there's a ceasefire, I'm feeling pretty good about the market, and we might even see QQQ, net option sentiment, creep up again. I'm saying that because that might have been the big drag on it now. Like, I think a lot of people kind of thought this conflict was inevitable. So that could have been what's really dragging that down. We might come out of it. And the reason I'm saying that is, obviously the forces trying to make this deal are, like, I think Iranians that are now in power that just want it to end and are probably going to be conceding everything that the Americans want about the nuclear program, right? And I imagine some concessions about oil as well, but I don't necessarily think those will make it into the papers. Sometimes that doesn't, but I imagine there will be some convenient business deals announced following this. That's what I would expect the terms of surrender to be, or they might not call it a surrender. They'll probably just call it a deal so everybody could save a little face, but it would be a surrender. But yeah, that's why I don't think this is getting settled unless the US and Israel feel like they have a government that's very friendly to them in Iran. So yeah, I think that's why I'd feel pretty safe if there was a ceasefire. I think the terms of peace would make it very unlikely that the U.S. or Israel would strike anymore, and also unlikely that the Iranian government that just like sued for peace would want to do anything. The one caveat, and like I'm going to knock on wood on this one as always, I don't necessarily think that that puts the U.S. out of the woods in terms of a retaliatory terror attack, which could hurt the markets. But it makes the tension flare up, like a lower probability in a terrorist attack, while it's a higher probability event than it normally would be, which is there's always some probability of it. I think that that was never a huge probability, but I do think it's going to be elevated for a little while, just because it's quite possible that the new government makes peace but still wants to get revenge, and they could probably just, like, if something happened, they'd probably just try to deny it, and it might be who knows if they take that risk. And legitimately there might be like sleeper cells that are now like detached from intelligence or their sources or whatever, because they eliminated a bunch of senior officials, and these things tend to be pretty secret. So it's possible the sleeper cells are now like detached from their contact, and they might also choose to do something. But yeah, I think that's all I have to say on the subject.
Yeah, I mean, not to get so into the minutia of it, but I do think, like, I was wondering how would Iran even get like the energy from their troops, their force to fight when you see the number one and number two killed within days, and the citizens of the country seem to not really like the government. So it does make me nervous in what you're saying of like a terrorist type attack situation, because that requires a lot less like coordination and energy and moving parts and people. Like it could, and you could have a super big impact with just a few people doing something crazily, like you were saying, I hope it never happens, but just on their own accord almost. You just need a few people. So hopefully not, but
yeah,
yeah.
I mean, and there's the old like saying of like you make peace with your enemies, right? So I think that it just might be like it might be an obvious reality. Like I think the previous interactions between like Iran and the US, where there was like a lot of bluster, where they were like, obviously they have to be like, we'll attack with, a fiery rain of fury, like, well, and like we don't know if this is the full extent of what they had planned. But the fact that they are trying to make peace probably suggests that they don't feel like they have a lot of ways to persuade the U.S. or Israel to stop at this point. And the other thing is like they pissed off a lot of their neighbors and they launched strikes at them. AWS, one of the reasons they attacked the UAE, I guess, was to hit AWS, which is kind of hilarious. A hilarious like clapback at Claude, especially because like Claude just got fired by the U.S. And I wonder if that news, like these retaliations were kind of like automated already, and they didn't hear that they're fired. I guess it's harder. It's a little harder to retaliate against OpenAI. But maybe, well, I guess Claude was already used for the attack, and that's what they're like retaliating against. But it does show how far we've come in terms of like AI advancement. That one of the counter targets, one of the primary counter targets for Iran was AWS, Amazon, for what happened with Claude.
Crazy. I see Nick in the chat saying he's tuning in from New Zealand. I'm wondering what time it is there. Is it early morning, or are you so far ahead of us it's not that early for you? But welcome in today.
I was going to say down under, but I don't think New Zealand has like a similar phrase.
Yeah, close enough.
I'm not going to do a terrible Australian accent either. I'm going to spare all of you.
I wanted to follow up on something that you mentioned on Monday of how you were going through like all of the bear catalysts that are currently at hand in the market, and there's like either none or like one bull catalyst, and it's like you can almost not think of any. And I'm want to double click on that point and dive in a bit and ask you, like, so the market's superpower seems to be to price in everything and then adjust expectations. And then, so if everybody is expecting bearish, or everybody knows all of the bearish catalysts, the market will reset itself. And then all you need is like a slight bull catalyst to adjust it, versus where when the market is all bullish and there's all bull catalysts, by contrast, you just need a slightly bearish catalyst to readjust things. So do you think the market is currently in a state where everybody's kind of feeling bearish, everybody knows all the risks? Maybe we're setting ourselves up where like one positive headline, like we're saying with the war or anything else, comes through and we could see a bull rally kind of kick off here because people are positioned and there are so many bear catalysts?
So the way that I look at this is I think a lot of what the market was reacting to there's a difference between like pricing in a bunch of events that are kind of like, like when we talk about like, interest rate cuts being more in the distance. I think some of this could be Warsh being officially named. I don't know about that. And just people like that headline making people think that rate cuts are on like the horizon. But like some of these other things, like even when we talk about like the domestic tensions that have like subsided a lot since the Minnesota thing ended. That was like something that was like a low probability thing that was just like, I think, adding to the overall nervousness. But especially like as it got closer and you look at these poly market bets, and I have some relatives. I actually was talking to a relative of mine in the intelligence services who was like, I actually saw him on, what was it? Friday, like it was like right before. And he said like, Sunday. Like my dad asked if it was going to be Sunday. I guess he was reading, which my dad saying it leads me to believe that he was watching Fox News. And they were saying that. And then, my relative in the intelligence services like kind of confirmed that timeline. So I look at that and it's just like how sure everything was. You see all of like the bank stocks, that we wrote about last Sunday, like all of that preparing. I think that, we talk about probabilistic pricing in, right? And like, I don't know, looking at all that, it seems like an intelligent thing that we're like picking up that's like dragging down these bank stocks, whatever. Like you have to think people were pricing it in last week at least at 50%, if not more, right? So maybe you go back, 2 weeks, there's like kind of like an acceleration to these things. So you have to look at like, maybe even like 2 weeks ago when we were talking about what's dragging the market down. I think, and the net option sentiment and the perma hedge behavior, I do think we can probably chalk a lot of that up to hedging around this event. Because even at a 20% chance, like I said, we probably couldn't have hoped that it went better than this, right? A few American lives lost, no targets in the U.S. hit. Israel wasn't really hit that hard. That would have demonstrated like some, some capabilities that they had. It's pretty much as well as we could have thought to go. And the market still did test a plunge, right? So I think it's very realistic to understand like why people were hedging so aggressively and that they likely were hedging pretty aggressively. So I think that's what we were looking at. And we were looking at being priced in. And that stands to reason that things might get pretty bullish again after this is cleared up. But I do think the other side of it is definitely like that. I don't think that it's over yet, which is why I'm cautioning against, exuberance, because the only other thing we've talked about, like, war game theory a lot. It's something that I've actually like read a lot about as a history major and just an interest in history. Talking about peace is also something that you do to distract from an attack that you're making a lot of the time. So that's also why I'm not getting too comfortable. My hope is that it isn't that, but I would say whether they were out of ammunition or they had a good counterattack plan still, this is probably what they would do regardless, given how much of their senior leadership has been attacked, just where they stand in the war. You'd want there to be as much backing off from the other side, thinking that there might be peace, relaxing, regardless. This would be their move.
So it sounds like, trade with caution, stay pretty hedged both ways, no matter what at the moment. Nothing really changed with your opinion there so far. I see Mario's in the chat saying hello from Mexico City. Good to see you, Mario. Nick is asking about Broadcom, Avgo earnings today, which I had written down for us to bring up because a massive company, about 1.5 trillion market cap still. They are down about 20% from their all-time highs, and we're in a bit of an AI malaise, you could say, I feel like, with the semiconductor stocks and all the major AI players in the market. So how are you feeling about Broadcom heading into their earnings after the bell today?
They were 40. That option sentiment had opened. Now they're 89. That is an interesting move. And their downside was was 36 down to 32. That was looks like a sharper drop. I mean, I don't know. 38 upside. It's not very good. Those are always the toughest ones to read, right? That net option sentiment says, people are betting on it, right? But that upside says that, there's not a lot of confidence in the stock long term. So that's tough. I mean, especially with today, I'd probably lean towards a positive earnings with that net option sentiment move up. But not enough to bet on it. I would like to have seen, I would feel way better, and this is just to give people an idea of how I think about these numbers and movements or absolutes. If that upside also went above 50 today, I'd be much more inclined to say there might be something there to bet on. And there might be, but I don't feel good enough about it. We'll talk more about, we got more to the AI story that we'll talk about.
It feels really difficult for me to imagine Broadcom ripping through all-time highs and just soaring higher in the foreseeable future, like in the next couple months. I want to hear your thoughts on that as well. But then with that, that's how I kind of feel right now. So it almost feels like your upside is capped. Like even if they had a good earnings, reacted well, maybe went back up to the all-time highs, it just seems the way the market is right now, it's difficult to imagine it rallying much further. Whereas in the past couple of years, it was like the ceiling is limitless for these companies. That's how it felt. They kept rallying, new all-time high, new all-time high. Would you agree with that? Does it seem like some of these companies are capped at the moment? Like even if they react good, nobody's really trusting them to achieve new all-time highs. We're obviously seeing the market just go sideways. A lot of companies are down from their all-time highs. Or does it not feel that way? Could you see some of these major players, major leaders lead us out of where we are right now?
I mean, I could see Broadcom with the good earnings easily going up 10, 15%, like gain a lot of that ground back. But that's the problem. I think we're also in kind of a zone where they could do poorly. So yeah, I think where I stand with it is that, and I think this is where a lot of people are, is there's still that big down. I think there's still that big downside risk in AI names. And we've seen AI names get hit really hard with some of these negative news events lately. So yeah, I think that's where I stand on it. And I think that's where the market seems to stand on it.
Well, on the other side of things there, maybe Michael Burry, that is one step ahead the market, like he's typically been throughout his investing career, because he was early to this whole circular AI economy, valuations. He was hating on Palantir and NVIDIA, the way that companies were valuing their chips. He said they were not doing it properly. And now it has come out today, after months and months of saying this, that he has taken, or not today, I think earlier this week, that he's taken a position in Adobe, which was like the king of being, a company killed by AI. So it's funny that he's not only he's doubling, tripling, quadrupling down on this anti-AI kind of stance he's had against the markets, and he's taking the company that is supposed to be hit hardest by it. I've seen a lot of people beginning to speak about Adobe and other companies, a lot of the other SaaS companies that have been hit super hard with their quote unquote businesses dying. But it's interesting to see Burry pick Adobe. Do you think he'll be proven right again? Is this a good sign for any of those SaaS or companies that have been hit hardest by the AI impacts? Could we see a boost in all of them? And then specifically Adobe with his stake in there.
I mean, let's look at Adobe and the signals. I think that I do think that I'm more bullish on these like software as a service. 90 in an option sentiment. Yeah, I would consider Adobe. Um, I'm definitely more I'm more bullish on. I was actually having an interaction on LinkedIn today that I'm more bullish on software as a service because I think actually one of the best things for these companies might be that I think some people might wait to switch until there's more kind of like fully agentic products, right? I think there's a lot of these companies that kind of have this app layer where, like, yeah, you could create that same app layer with a lot less people in your company, kind of more, new features, more intuitive things. But I also think that especially large companies might be slower to switch to new, like cheaper, more intuitive softwares if they think there might be new interaction layers completely, right? And what I mean by that is like instead of you maybe like editing a PDF with more intelligence, right? Really just being like, this is what I want this is what I want my PDF to look like, right? Or like all of your local, a lot of these places are starting to like be able to run these things locally for security measures. Them having all of it, just be like, I actually want a new PDF that's these three combined all in one thing. I just did a really cool thing with Claude for South by Southwest where I combined a bunch of lists. I asked for a Claude rank on like what events I should go to. And then also there was a Claude rank objectively, there was mine, and then like a list for me, and I just like type my name and occupation, and then a list for her and her name and occupation, and we just like had this list, had the recommended events, but that's still kind of like an app layer, like I'm saying, right? I actually think what some of these places might be waiting for before they switch, because there's always big like switching costs to retrain people, things like that. I think people might just be waiting for the next layer, which is do this and actually just apply for me to all of my top events, and also just like when I get double booked for something, pull it back. So I think that because some of these agentic workflows are accelerating so quickly, like, or at least the talk around that and like a lot of where, funding is going and things like that, I actually think like that might prop up software as a service returns for longer. I mean, even like we have Intuit in our portfolio right now and it's done well. And I think like even though it got hit a little bit on the news on I believe a double beat, like a slightly soft guidance, it rebounded really well. I think because I think the story that people are telling isn't quite there yet in terms of these companies dying. And I think that's actually evidence that not as many people are switching off these things. And a lot of it is just narrative, right? And obviously I'm acknowledging that narrative will turn into these companies dying eventually, and a lot of companies dying, right? But I think in the short term, there's value in things like Intuit. I think companies like CRM, ServiceNow, I've actually seen pretty high in our signals recently. I probably would add them if we didn't also have Intuit. Maybe we'll do a swap at some point. But yeah, that's how I view the sector right now, or the software as a service subsector. I think there's opportunity to make money in the short term. Maybe like I feel comfortable saying like into the next earnings period. I'd have to check in again after that. But I think the way these companies guide, there's opportunities. And to the extent that obviously there's huge downside in them guiding down more than the market might have thought, right? But I don't necessarily see huge downside in the short term because companies are slow to switch things. And the fact is, I don't see the products yet that they'd really want to switch to, right? So it's kind of easy to say in the short term, like, and I like this thesis the more that I talk about it, right? It's kind of easy to say in the short term that like they're not going to be guiding down until there's legitimate products to switch to. And if they're not guiding down, there's opportunity because like even a small down guidance for Intuit, we've seen a rally after earnings. So basically what the market is even saying is like, there is big opportunity if these companies stay close to guidance, and they're likely to stay close to guidance if there's no substitute products, right? What are other people switching to? Where's the lost revenue?
This has been my challenge with the people that think they're going to die the whole time, the SaaS companies. And it's like the switching costs and the user bases, like you're saying. And I'm wondering, the tech startup companies and the AI startup companies, they're the ones that maybe have better tech, better product, but no users yet. This legacy SaaS companies are the ones that have all the users, which, it's very tough, I feel like, to get people to switch the ecosystem they're used to. Can't you see these companies kind of partnering or blending? And there's not going to be like a light switch where like these companies are dead overnight because there's a better product, and this company is like growing leaps and bounds and getting all the users. And it's just going to be more of a blend over time of like, you're going to match make the best tech with the best legacy companies, and it's going to be more, it's not going to be as like black and white as I feel like people want or are expecting.
Well, why I'm not giving like a long timeline and why I'm saying it that way is like a lot of switching costs is retraining, and people are lazy, and like some retraining is just like people not even trying. Like if you're just like you use Adobe for like PDF editor or whatever, and you switch to some new company and they're like, I don't know how to use that, right? And they just won't even try, even if it's easier. Like that's part of what makes switching costs tough is people are lazy and generally, not that smart on the whole. So there's switching costs there. There's, there's IT, there's installs. There's a lot of like, you can read all about, the term switching costs. I don't feel that I need to go too deep down the road, right? But the thing about like what I'm talking about, things that eliminate the app layer, right? That actually helps lazy people, right? So those eliminate a lot of the problems with switching costs. Like all of a sudden, if you're not, you have to learn a new app. If you're like, you remember that PDF editing you used to do? You can just talk into a notes thing and it'll make edits for you, right? Or you could tell it to combine the documents that you want to. Or you could just be like, like all these docs that, don't have my proper signature on it. Like take them, redo them, make these changes, send them out to be signed again, right? I think that's why like, DocuSign has done bad, right? Because that might be the first thing to go. Just be like, hey, sign this document for me, send it out for signature for this email address. Right? Like, I think that like what we're talking about, the level of technology that we are talking about kind of eliminates that switching cost problem, which is why I wouldn't want to be around, this too long, because the second, like the market is, we say this time and time again, people in the know are ahead, right? So you might see, there might be like a Y Combinator funded company that everybody's hearing about, that everybody knows that does that, right? And the market just kind of becomes aware of it all at the same time. And DocuSign is down 30%, like before you even are aware of that company existing. So I think that's the danger. And that's why I'm just like, I feel good about this for the next quarter. Like, especially in terms of like Salesforce, right? Because like the biggest problem, like let's talk about Salesforce and an app layer for Salesforce, right? Like in the next quarter, I feel very good just because like these AI emails are such garbage right now, right? And I think that's the biggest obstacle, right? Or you could just be like, hey, like email this to my not my like top 20 most contacted like clients, right? That's removing the app layer right there. But if you don't trust the email being sent, that's the problem, right? It's not hard to give that command. That's the biggest problem with eliminating that app layer. And I don't see that being solved in a quarter because that AI like slop stuff, like these things are going to have to be a lot smarter about the way people actually talk. And there's actually another problem of the fact that like I think part of it isn't necessarily even the way the AIs communicate. It's just that they all communicate the same way. And so, like, when you get all these AI emails, that's like one of the biggest ways I can tell now. Like, a lot of them are using the same terms, and I'm getting 20 of them, for similar pitches for similar companies. So I think that like, when you talk about like, quote unquote, eliminating the app layer, there's different problems that need to be addressed, but I definitely don't see like actually that like DocuSign thing is like kind of the closest thing I could come up with on the spot. Maybe I could think of a better one, but I'm thinking for longer. But I think that is, because that's such a simple problem. There are security things with that, but like those security problems are inherent to any company, any e-signature company. You could have like, just like you could log in, you could actually have a voice check, right? That's actually a little stronger than a two-factor. Maybe not. Those voice things are pretty. You could do two-factor. Maybe you could have a code too that you had to like, yeah, you could be like, my code is 496, you could have a little app and do that to sign something. So you could work around the security.
It's fascinating stuff, and I'm wondering if Burry is going to be like quick in, quick out with this, if he gets a quick gain, or we'll see if he holds on for Adobe for a while, and it's going to be interesting to watch. Now, we were talking earlier in the stream about how maybe some of the hedges are being taken off in the market with what we're seeing today, and I'm wondering if you think that's going on with the crypto space. Bitcoin up over 8%. Coinbase was up over 15% when we checked in the beginning of the stream. Now, there was also another catalyst that happened. The crypto industry and the banking industry have been at odds over this Genius Act over whether stablecoins can pay out people that are holding them. And the banks are hating that idea. So Trump tweeted, quote, "The Genius Act is being threatened and undermined by the banks, and that is unacceptable. They need to make a good deal with the crypto industry because that's what's in best interest of the American people." So Trump kind of looks like he's taking the side of the crypto companies. Do you think this is a long-lasting rally we're seeing here? These stocks, these companies, this sector has been pretty lackluster for a bit now. So now that it has that government support, administrational support, we've been highlighting a lot with a lot of the companies that were doing well. How you feeling about it?
Yeah, I mean, I could see it ripping from here, right? Like, I think if this war settles, grab yourself some crypto, right? A real like peace deal. Because this stuff. It's not necessarily it's not about anything other than the headlines, right? And a headline like that combined with the catalyst for the market overall could really send it soaring.
I guess, JC, the counter to that would just be that there's like hundreds of millions of people that have it, so it going up, I guess, would be good for them. But is this an interesting thing about crypto right now? Like, with all of the coins, there is no valuation that matters, right? They don't trade off like valuations, so they're like purely a sentiment check on the QQQ, and then like depending on how Bitcoin would be like the most stable, and then you go into altcoins that would be even more hyper volatile. But they just kind of trade at like a leverage of the QQQ, and then depending on the sentiment, bullish, bearish, Are they easier to predict, do you think, of like the movements than stocks would be, since the valuation aspect of it is kind of like removed?
No, it's harder because it's like it's easier to manipulate, and like not only is it easier to manipulate because it's like so momentum, like it's like such momentum. There's certain like you know uh influencers and these kind of like off market transactions, but also like everybody who I've talked to says like especially on the smaller coins, it is not that hard to force a price move. Like there's just not the same liquidity as like on a larger cap stock as there in on these coins of similar market caps. It's a lot easier to force prices up with dollars.
NW is asking in the chat about Trump's energy pledge. Do you have any thoughts on how it will impact tech will impact that sector going forward?
I don't know what the energy pledge is.
I saw it, I think. Yeah.
Yeah, I don't really see what the actual pledge is. Yeah, I see some jargon about it. I don't see what it is, but I'll read. I'll come back on Monday prepared to talk about it.
We're running out of time here, so let me ask everybody, if you haven't liked it up yet and you've enjoyed the stream so far, be sure to hit that like button. I do want to get your thoughts on this South Korea situation because their stock market is currently crashing. Now, from everything I could find, it seemed like it was due to the implications of the war. I guess they're a little bit closer, but I'm wondering like why it would specifically affect their market so much more. I also read that their market is just hypersensitive in like a few names, mostly semiconductor related, and they're going down. And the market has been on a tear before this recent drop, but it was down 12% today. So any thoughts on the South Korea market? Can it drip on over into the USA market, or is it a separate thing?
Maybe everybody thinks that Kim Jong-un feels left out of all these missile launches, and he might want to join the party.
Don't joke about that.
No, I actually like that's not even my idea. I saw some like memes and shorts on it. I don't know just what happened there. My computer just turned like on and off. I don't know. My light turned off. Odd. Well, guess not a big deal. We're still going. I might have fried the thing. So realistically, I think probably what we're looking at is like the market had momentum down before this like piece. I think it was like 2:40 a.m. Eastern. That like this peace thing broke, and those had already been, the market had already been going down. And then similarly, it was like just the New York Times that reported. I think that's probably why it was like a reaction to like our market. These things are always behind us. So I would expect it to bounce back.
We're losing you, George.
I don't know what's going on. I would expect it to bounce back.
It'll be interesting to see, when it opens up again. JC said about 70% of South Korean oil is imported from Middle East. So there you go. Pretty hypersensitive to that.
All right, I think that's my curtain call.
Yeah. Well, we made it all the way to the end. Pretty good. I hope you guys enjoyed the stream today. Thank you, George. We had a great list of topics, and hopefully it was valuable for you all on a green day in the markets. We will see you guys back here Monday, 11 a.m. Have a great rest of your week, everybody.
Oh, wait, I want to give people as much notice. I'm not going to do Wednesday. I'm actually like trying to take as much of a day to myself next Wednesday.
So only Monday next week. So yeah. Can we guarantee a little bit of a super stream? Maybe an hour 15, hour 30.
We'll do a super stream on Monday.
Okay. All right. So see you guys all then. Thank you, George. See you guys soon.